Welcome, everyone. Thanks for joining. As always, welcome to Lunchtime Lessons, another installment here today. As always, I will be putting our social media and events calendar in the chat window for you to check out future sessions coming up. But today, we're joined by Jon Hughes and Ernest Holtzheimer, who are attorneys at Montgomery McCracken Law Firm, where they're both members of the firm's business department. And today they're going to be talking about COVID-19 and the challenges business owners have been facing. We've all been, under stress and facing difficulties, but this is a population facing unique challenges. So fortunately, there are some programs in place now to offer some relief to business owners. And that's what Jon and Ernie are going to be talking about today. So they're here to share their knowledge, and we're very thankful for them being here. So Jon, if you will, just take it away.
Yeah, thank you, Jake, and good afternoon to everybody. So really quickly, my name is Jon Hughes. I'm a partner at Montgomery McCracken. I am co-chair of the firm's Private Capital and Emerging Companies Practice Group. As that name suggests, the practice group is comprised of attorneys who work with both investors, individuals and institutional investors, and then companies of all shapes and sizes working towards capital raise and anything from formation to between. Just again, by way of a brief background, I've worked with various universities and colleges in the area trying to help either students or companies associated with universities, fulfill this mission or along the track that they're trying to follow. Ernie can speak to his experience in the same realm. Just as again, brief background, an example of something that we're working on, we're currently helping a company that's come out of Penn's integrated product design program. They've already graduated and they've got a product that they're looking to get to market, and we're helping them, from everything from the capital raise to the IP protection. So Ernie, do you want to introduce yourself?
Sure. So as with Jon, an attorney in Montgomery McCracken's business department. I'm an associate, and I'm the other co-chair of the Private Capital and Emerging Companies Practice Group. Similar background as Jon, working with local entrepreneurs and technology coming out of local universities, and not just local, but also regional and nationwide, in assisting them with raising capital and getting a start. One other thing we have on this slide here is, as Jake alluded to, a lot of businesses that we work with are facing, a very unique situation here with COVID-19. Our firm's put together a COVID-19 resource center, which has had input from almost all of our practice groups, from IP to maritime and everything in between, employment issues, financing issues. Covering a lot of topics as they continuously develop on a daily basis. So these slides will be shared afterwards, and you can access that resource center at your leisure. So today, we're going to be covering some of the federal, state, and local monetary relief and economic relief programs that are available to small businesses, solo practitioners, entrepreneurs, and with that, we'll just get started. Jon?
Yeah, so Ernie, if you wouldn't mind, if you want to give maybe like the basic overview and the guts of the Paycheck Protection Program, and perhaps we can just offer a few notes. This is a program that's got no stress, and there may be less questions about the availability for the application process.
Yeah, sure. So the PPP is the Paycheck Protection Program. It's a part of the CARES Act that came out at the end of March. Which was a $2.2 trillion stimulus act. As it's been covered in the news very broadly, very frequently. The PPP program was $349 billion allocated to the SBA's 7A lending program, specifically for businesses, for the most part, that have 500 or less employees. There are some exceptions to that based on SBA rules, but this was supposed to be a loan program that supported maintaining employee headcount and payroll So trying to forego layoffs and furloughs in small businesses. As I think we'll discuss in a second, the program has been kind of abused by larger companies, and the SBA has come out with some recent rules and regulations trying to mitigate that in this most recent round of funding. But two things that are extremely important, I think, for this program are: one, the loans are eligible for forgiveness, so they turn into a grant if the loan proceeds are used in proper ways, and that is using 75% of the loan proceeds for payroll costs, which is a certain calculation set forth in the Act, rent, mortgage, interest, utility bills, and things that are specifically set forth in the statute. But it is possible to have this loan completely forgiven. So that is why it's been such a popular program. The second important thing that a lot of people may not know, is not as advertised, is that attorney's fees and what's called agent's fees, so anyone that assists you with the application, their fees are all wrapped up in the lender's fees. So there's actually no expense to the borrower in terms of getting legal advice for the application. So there's been, as I mentioned, several issues with the program. There's been a lot of people have questions about it. First of all, this was a program that was pushed out in a very fast manner. The applications were put out. So the Paycheck Protection Program was passed on March 27th. The applications were available April 3rd, and then the initial round of funding ran out. I think it was not even April 20th. It was sometime last week, early last week, last Thursday, I think, maybe a little before that. But there's been significant lack of guidance available. So actually the night before applications went live, the SBA changed the application itself, which led to a lot of issues at lenders in terms of accepting and processing applications. There's a lot of questions about the certifications that have to be made. One in particular is that the SBA requires the borrower to certify that the loan is quote unquote necessary to support the business. That's become a question in terms of these public companies that have, allegedly abused the program, and also in terms of companies that have venture capital or other private equity backing, because the SBA could look to that possibly and say, it wasn't necessary for you to take this loan because you could have gone to your investor and found and used another source of capital to maintain your payroll.
And Ernie, if I can just chime in really quickly with respect to the lack of guidance that's available, it's not just the regulatory guidance that's not available. I've worked with two clients who have applied through the same bank, and their applications were submitted within 24 hours of each other, and each of the applicants had a different experience with the same lender, despite having their applications gone through almost simultaneously. So there's a lot of questions that exist, and unfortunately, some of it seems to be, or the responsiveness seems to be linked to the banking relationship that the applicant has. So the larger clients with the longer account history may be faring generally more favorably than the smaller clients with a relatively new account history.
Yeah, that's absolutely right. That's something that, to this next point on the slide, that, 200 public companies applied for $860 million in PPP loans. The majority of, if not all of that, was accepted and funded. Whereas there are, thousands, if not more, of other applicants that are smaller that probably got their applications in first that didn't get approved, that didn't get funded because the program ran out of backing. So, there was definitely preferential treatment in terms of, who the banks were processing and at what rate they were processing them. So in this next round, there's supposed to be some fixes implemented as regards that. So there's a certain amount of funding that's going to be allocated to smaller banks. There's going to be thresholds implemented onto each bank that, certain banks can't process X billions of dollars of loans themselves, whereas other banks are only processing, Y millions of dollars of loans. So they're trying to figure this out, but again, it was just rolled out in such a fast manner that it's kind of a trial by fire type situation, and unfortunately, it's left a lot of smaller companies hanging, which we'll get to shortly. Other supplemental programs that people can look to, but it's been unfortunate in the way that's been rolled out. So as I mentioned, go ahead. Sorry.
Yeah, no, just really quickly, if you have applied or if you're thinking of applying, the best advice that we can give is be an advocate for yourself. If you've got somebody who's your relationship manager at the bank, be a pain, contact them at least once a day and try to find others in the community that may have applied either with the same bank or a different bank to understand what their experiences are, because as easy as to blame the banks, and banks are already being sued for not dispersing funds. The banks were playing catch up, as many of us were with respect to this program. So don't be afraid to raise your hand and knock on the bank's door.
Yeah. And in kind of the same line with having a relationship, there are a lot of small businesses that don't have a banking relationship. The city of Philadelphia actually just over the weekend or on Friday announced that they partnered with Goldman Sachs for a dedicated $10 million through PPP loans to be facilitated through a company called Lendistry. That's specifically for folks that don't have a prior banking relationship. So a lot of the major banks were only servicing their current customers and weren't accepting new customers. And this is supposed to try to alleviate at least some of that pain. $10 million sounds like a lot of money, but unfortunately the economic impact of this has been very significant, and I would imagine that $10 million is going to go quickly. So for folks that haven't applied yet, and don't have an existing banking relationship, I would highly recommend trying to take advantage of this program. So just last week and starting today, actually started about an hour and a half ago, there's another $310 billion being allocated to this program. The SBA continues to put out on almost a daily basis guidance on the application process and other parts of the process, but one that hasn't been significantly touched upon yet is the loan forgiveness portion of it. So that is what's drawing a lot of applicants to this program, but there's not a lot of guidance on what happens if employee headcount drops or if people, cut salaries. There's calculations incorporated in the statute, but there's a lot of gray area. So for instance, we've had clients come up with questions as to say, hey, I received a PPP loan. I understand that I can't lay off any of my employees. And if I do, there's a monetary penalty in the amount of my loan that's forgiven. But this person did X action at work, which is, termination for cause under their agreement. I need to get rid of this person. I can't have this type of action happening in my work environment. Now people are balancing the drop in headcount and having to pay back these loans versus, keeping someone around solely for keeping headcount at a certain level. I anticipate that guidance is going to be issued, hopefully saying that if an employee needs to be terminated for cause or if an employee quits, it's another situation where an employer will be penalized in terms of how much they are forgiven in terms of a PPP loan. I anticipate guidance on those topics and hopefully more topics to come out after we get past the application phase and, people start working towards the forgiveness portion of this. So another topic that a lot of people haven't been focusing on is another program, mainly because it's not 100% forgivable. So the SBA has economic injury disaster loans available. These are working capital loans up to $2 million, same employee threshold for the most part, 500 or fewer employees. The best I can analogize this is to kind of taking out a mortgage for working capital. These are long-term loans at fairly reasonable interest rates. So 30-year loans, 3.75% for business, 2.75% for nonprofits. There are some incentives as opposed to regular going to your bank and getting a loan through them. You can get $200,000 approved without a personal guarantee If it's a fairly small loan, 25,000 or less, you don't have to give any collateral for it. But if it is greater than 25,000, they will take a security interest in your business's assets other than real estate. And the portion that people are kind of trying to take advantage of for this is there's a $10,000 loan advance program. So if you need immediate cash and you do an EIDL application, you'll get $10,000 within 3 days of that application being submitted. And that doesn't have to be repaid, whether it's approved or declined. So there's a significant benefit there.
Yeah, and so far I haven't seen any clients who have not received the money within the 3-day period. So everyone that's applied has actually received the $10,000 within the 3-day period.
Yeah. So unfortunately, this program also put pause on the application process because money was getting tight. So right now, round 2 rolled out again this morning, same time as the PPP loan. They started processing additional applications as of 10:30 this morning. They're doing it on a first come, first served basis. So they're not yet accepting new applications because there are so many that remain in the queue. But they do anticipate that because $60 billion has been allocated to this, that they are going to be able to accept new applications. It's just a matter of when. And to give a little bit of an overview of the difference in terms of how many PPP loans were given out and how many EIDL loans have been given out. As we mentioned, PPP has gone through $349 billion in less than 2 weeks. As of the end of last week, there were only $7.97 billion in EIDL loans that were given out. And in PA, where we're at, it's only been $221 million. So there are a lot of people that maybe have been taking advantage of some of the other programs that we're going to talk about in a minute, the state and local programs, but this is definitely one that people should consider. It's a reasonable interest rate. It's not 0%, but there is the $10,000 component that's forgivable if you're able to get that. So state and local programs, what I'll run through, some Pennsylvania, some New Jersey, some specific for nonprofits, and then some national. These are by far, this is by far not an exhaustive list of programs that are available. Our firm's actually working on what we hope to be a somewhat exhaustive list so that people can take advantage of these. As these people find out about these programs, they have been fully subscribed and funds have run out. So I'll show that on the next slide, but some that are available in Pennsylvania and some in Philadelphia specifically. The Enterprise Center is giving low interest loans, 1%, which is a very reasonable interest rate. It's a tiered structure based on your annual revenue. Ben Franklin Technology Partners was just allocated $4 million in funding from the state, and each Ben Franklin Technology Partners area, there's 4 of them, they're going to be matching $1 million. So there's going to be $8 million total available to their portfolio companies. For folks that are interested in, they've been working through acquiring new equipment or, a new building or building a new building, there are loan guarantee programs available, such as the First Industries Fund Loan Guarantee, which guarantees up to a certain amount. It again helps people out who might not be able to qualify for that loan without the guarantee. And there's also some programs that are industry specific. So this one, for example, is for early education programs and companies. So provides a grant up to $20,000 for organizations that provide early learning programs for children from birth to age 5. So, think daycare centers, licensed childcare, in-home childcare, pre-K, those types of programs. $20,000 can go a long way towards salary. We were actually working with a client last week unfortunately, she hasn't been able to obtain her PPP loan yet. The funding ran out before her loan was processed. So, we connected her with this program, and hopefully she's going to get at least some temporary funding. Hopefully she'll get that PPP loan through this next tranche of funding. But, $20,000 can go a long way to keep some people employed for, a month or two. So there's, again, programs that have run out of capital and fairly quickly. So the state came up with what they call the CAWA program, which is the Working Capital Access Program for COVID-19. So these were loans for up to $100,000 for working capital. There were requirements. You had to have 100 or fewer employees, a 3-year loan with a 12-year amortization, so low payments at the beginning and no payments actually in the first year. So with a balloon payment at the end and a 0% interest rate unless you're an agricultural producer. So again, this is a great opportunity to borrow money at a low interest rate or 0 interest rate possibly. But unfortunately, there's been so much economic impact in the state that this program has been oversubscribed. They're no longer taking applications right now, but we're hoping with some of the federal allocations and additional moving around of budget money in the state that they're going to reallocate some funding to this. So we'll keep an eye on it. We recommend people keeping an eye on these programs as well. Same thing with Philadelphia. There was a COVID-19 Small Business Relief Fund established, which was oversubscribed within the first week. University City District Small Business Emergency Fund gave small micro grants out as well, and kind of specific criteria to be in the University City District, but they have run out of money as well. But we're hoping that more money is allocated. For those in New Jersey actually, and for some of these, you don't have to be based in New Jersey. You just have to have some employees in New Jersey. So think about that when you're considering applying to these programs as well. Maybe you're not headquartered in a nearby state, New Jersey or Delaware, but you have either a location there or you have several employees that are residents of those states that could make you eligible for certain funding. So New Jersey actually came up with what I think is a really cool eligibility wizard. It's probably about 30 questions, all yes or no. You just run through it really quickly, and it'll tell you what you're eligible for in terms of New Jersey funding and federal funding as well. So it'll ask you, how many employees you have in New Jersey, what your annual revenues are, et cetera, and that'll kind of pop up with this is what you're eligible for. So very useful tool. Other ones are through the NJDA and NJ Community Capital. There are loan programs. So Garden State Relief Fund is a working capital loan program. You'll see that a lot of these are working capital programs. A lot of them are targeted towards keeping people employed. And a lot of them are targeted towards very small businesses. So these are even smaller than the federal. This is 3 to 50 full-time employees. You can get a loan with no fees, but a 3% interest rate and 36-month term. The New Jersey Entrepreneur Guarantee Program is actually fairly unique in the sense that this is a program through the NJEDA, which if you've raised capital from a private investor, whether it's through a convertible note, a SAFE, or another equity transaction before March 9th of this year, if that investor agrees to loan your company additional funding to support working capital, and that agreement is made after March 26th of this year, so essentially the loan is for COVID-19, the state entity, the agency will guarantee 80% of that loan up to $200,000. So if you are based in New Jersey or otherwise qualify for this, reach out to your prior investors because this is a great opportunity. Unfortunately, I haven't seen a similar program like this come out of the state of Pennsylvania, the Commonwealth, but I think maybe with some lobbying we could get there, but this is a very unique opportunity that people should take advantage of if they qualify. Just another one for New Jersey, and again from NJEDA. This is another guarantee program for New Jersey lenders that are approved, focused on New Jersey-based businesses for loans up to $100,000. And then this is another closed but hopefully reinstated at some point program in New Jersey. Now, I'll go through very quickly because we're running out of time, but there also nonprofit specific funds. So private companies and other organizations have banded together to raise money or donate money for these efforts to keep 501c3 organizations in action and continuing to support their mission throughout this crisis. So Novartis is actually one of those. They're doing grants, which are fairly significant, $100,000 to $250,000. The focus is really on businesses that are supporting the healthcare infrastructure and or establishing platforms for COVID-19, or creating or enhancing new community health programs. So very healthcare specific, but these are sizable grants. So this could really go a long way for some companies. And again, this is it's not geographic specific, but they say that they're going to focus on areas where they have a physical location, which includes New Jersey and New York in our area. And they're only taking applications up till April 30th. So for those that qualify, they need to act fast on these. The Philadelphia COVID-19 Fund is another one for 501c3 organizations in Philadelphia. Again, targeted towards folks that are supporting populations that were greatly impacted by COVID-19. Bucks County is doing a similar thing with grants up to $10,000, and similarly must be used to address negative impacts of COVID-19. National programs, and I've only listed 2 here, but I think folks could do some more digging, and we're having our library research department do the same. There are a lot of incentive programs that folks can apply for that are either industry specific or specific to certain individuals. Like the Red Backpack Fund is giving grants to female entrepreneurs. They're doing this they're rolling it out on a sort of monthly basis. So it's a $5 million fund, I believe. And they close their April applications. The next round of applications opens up on May 4th. There's another application process in June, another application in July. So they're looking ahead and making sure that all the money isn't allocated at one time, and making sure that people have, it's a small amount of money, but it could be helpful to small businesses. Salesforce is another one. They're actually giving free access to Salesforce software and providing $10,000 grants to companies based in the US that have been established for 2 years as of March 2020 and have annual revenue between $250,000 and $2 million. So a lot of folks in large companies and various industry organizations are giving these sort of national funding that isn't getting the press coverage that the PPP and EIDL loans are getting, and a lot of which has been negative, unfortunately. So there are folks that haven't been able to take advantage of those programs, whether because of the rollout issues, whether because they don't have a pre-existing relationship with the lender, whatever the case may be. There's a significant amount of opportunity to take advantage of these state, local, and private national funds that are available and are great to keep people employed and to keep people developing technology and keep their business afloat. So with that, I talked a lot, and so I'm happy to take any questions. John's happy to take any questions. We're happy to give some more. I know we ran through the time pretty quickly, but happy to give some more scenarios of issues we've been dealing with clients if anybody has any specific questions.